Hey guys, it's Carrie Cobb here, your B.O.S.S mortgage coach, always coaching you on how to build opportunities through simple solutions. Today's simple solution is knowing what's going on in the market so that you know if you're ready to buy or sell. For this week's market update, stocks and mortgage bonds are both lower to start the week. So over the weekend, Atlanta Fed President Raphael Bostic said that the Fed could hike the federal funds rate by 50 basis points at one meeting if inflation remains elevated. Bostic also said every option is on the table for every meeting. So keep that in mind throughout this next year. Now, he did stick with his forecast that the Fed would do 3 25 basis point hikes in 2022. But there are others out there, like Bank of America, that are forecasting 7 total rate hikes in 2022. So very important to stay tuned in to what's going on in the market. Now, it is Jobs Week. With the ADP and BLS jobs report due for release on Wednesday and Friday, respectively, the markets are expecting around 200,000 job creations for the month of January in each report. Now, the unemployment rate is expected to remain at 3.9%. So the job figures may be weak in this report just simply due to that overhanging, looming Omicron and COVID. The BLS jobs report has 2 surveys so that you are aware. The business survey, where the headline job creation figure is pulled from, and the household survey, where the unemployment rate comes from. Okay? So the way the business survey is created, they look at how many individuals were on payroll during the sample week of the month. In this case, it was the week of the 12th in January. So again, they're looking at the people that were on payroll for that week. Now, to take something to take into consideration, because there were 14 million people who did not show for work at some point during January, any of those who were not working during the sample week and were not on paid sick leave, they may not show up as employed. So that's why this could temporarily skew the job figures a little bit lower for January. Okay, keep that in mind. It's also why it's probably going to disagree with the household survey, where the unemployment rate is derived from using a different method, where they actually call households to see if they are employed. This figure should not be negatively affected. So you could see, again, a big disparity between the 2 reports. Additionally, you probably won't see the unemployment rate negatively impacted as well, because it also comes from the household survey. All right, so that is it for our market update for the week, and I will be back with you next week for another market report or update. Please tune in every Monday, where I will post these on Facebook and Instagram, maybe YouTube. Something to think about. Because this is new for 2022 and new for starting February 1st, or for this situation, January 31st. Okay? All right. As always, Carrie Cobb, B.O.S.S mortgage coach. See you next week.